Hello and welcome to another update video about the DXY. So I'm quite pleased, yeah, we're following here the primary expectation and we made one more low. Remember in the last videos we talked about that most likely we can expect one more low here for the DXY. Assumption was after we broke above this trend line here that we could see an extended wave C in wave 4. Yeah, so it would be looking like, or the idea was it could really look like this so that we get a little bit upside before we make that last wave 5. I'm always a fan of, direct movements without those long, whatever, extensions or more complex corrections. But it seems like the market has chosen to do the direct sell-off. Yeah, so either way, there were two ways to get there. We took the direct path. I'm quite pleased with that. Does it mean this sort of ABC scenario is completely gone? No. You can get, obviously, you can get those flat patterns, those expanded flats, where they are rare, yeah, but they do happen, especially if you have a day like today where you had CPI data. Certainly, you have to argue that the CPI had a certain short-term effect on the DXY. So obviously we had a lower than expected inflation numbers from the US. That did have a bearish effect on the DXY, as it typically does. We had core CPI a little bit lower and let's say the normal CPI. Both had a slightly bearish effect on the DXY, but nothing that would have changed the trend. As I often say, when we do these, or this technical analysis or this Elliott wave analysis, typically when you have events, any kinds of events really, they normally lead to, or they can obviously lead to volatility, especially when you have everybody watching it, like CPI or the Fed interest rate decision. What they only very, very rarely do is that they change a trend. Yeah. So the trend to the downside was still in place here. We never broke above critical resistance. So the trend is just continuing to the downside. So therefore it is still possible, if you have this sort of expanded flat pattern, this just could have been triggered by today and we might still see that wave C to the upside in wave 4 and then another wave 5 down. As I said in yesterday's video, I believe it was, the target here for the wave 5, anything around $101 to $103 would be quite likely here for a fifth wave down. Could it be in already? Yes, technically yes, with that additional low. Do I believe it's in yet? No. For two reasons. So one reason is if this is an ABC, the B wave has 3 waves. A, B, C. So that means at the moment, if we go up from here, I've got 3 waves. Yeah, we could without a problem go up and then come down once more. Or if this already is the 5th wave to the downside and we already saw the ABC correction, then we should see 5 waves. At the moment I can only see a 1, a 2, a 3, maybe a 4, and there should be one more leg down ideally. The main reason why I considered a higher wave 4 in an extended ABC was because this wave 4 was quite short. Which is okay because we were in a descending wedge, yeah, but still it was a bit short. But yeah, nevertheless, key resistance stays in place, so that remains the case. I'm gonna add basically a red rectangle here onto the chart. This is the resistance area. What we have to say is that as long as this resistance is in place, market has a chance to go lower. Only really when we get above this region between $107 and $108, we can assume that the wave 5 low was in, yeah, or has been in. Because at the moment it's just continuing to go down further until we manage to break above this area. This is the critical area. As long as the price is below that, I will probably assume we're going to continue lower. It is really only as soon as we see that the market turns around, breaks above this area, that we can confirm a low has been made. If we go a little bit lower, as expected, and then turn around and move impulsively to the upside, we have a first indication that things are changing. So I would still, either way, I would like to see one more low at least here, maybe between 101 and 103. And then we can look out for impulses to the upside. And then we can probably we have some indications that things are changing. But until we really break above this level, we can't really, confirm it. So yeah, this is still what it is. And I don't, I talked about the high level wave patterns in the previous videos. My assumption is this is an A wave to the downside. There should now very shortly be a larger B wave. And again, the B wave is starting to unfold. I only will really believe that as soon as we break above that $107, $108 level. It depends a little bit on what kind of structure evolves here. So if we see a clear 5-wave move up, a 3-wave move down without breaking 108, we can already make that call earlier, but we're not there yet. So at the moment, the trend is still down. And this pattern would be embedded in a larger A, B, C wave. So after a top in wave B, which is, my view is probably going to be around $110, $112. We can't really confirm that until we see where we bottom here in wave A and then maybe see a beginning of the structure. But that's sort of roughly what I would expect. And then I would expect that we come down in a C wave and that would complete a wave 2 correction. And as you might remember, if you watched the previous videos, we are in this larger channel. And when we come down in this C wave, we might actually find some channel support around $95. But if this is really a wave 2, the correction down will most likely go down a bit lower. Yeah, and that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.